Anders, thank you so much for joining us here at Empower 2024. It's great to see you.
Thanks for having me.
Really just a sort of general question to start with. What sort of surprised you, I guess, about the global economy this year, and what are you seeing in terms of bond markets, and really what are the key themes for the rest of the year in your view?
Sure. Yeah, no, I think coming into the year, we were sort of stressing that there are a lot of crosswinds still going on in the broader global economy and the capital markets in general. And these are still very unprecedented times. So we've had that kind of attitude going into the year, and I think that's served us quite well. I would say, that being said, probably the main surprise has just been the inflation being so sticky and it taking so long for inflation to kind of move lower. It's really that in turn has been affecting the global economy. It's been having an impact on bond markets in general. This higher for longer kind of type concept is something that's really kind of playing through in the broader markets still. So that's been, I would say, the biggest surprise, and probably the biggest surprise to central bankers globally as well. In terms of themes here going forward, I think we're expecting a little bit calmer backdrop. I think importantly, as we're looking at central banks at this point, more or less we're seeing that trend of hiking kind of moving to a cutting trend. We're already started seeing that with ECB. We expect other global central banks to kind of follow that, and that should set up for a more balanced backdrop from a fixed income investing going forward. Inflation is moving lower, slower than maybe expected, but it's moving in the right direction. So from that perspective, we do see global rates to be moving lower as well. So that sets up for a good fixed income backdrop. And then finally, I would say we're constructive on fixed income. The yield environment is very attractive. Income investing is back, as I like to say, and the risk reward is really quite well balanced, particularly versus other asset classes. I like to say if it's higher for a bit longer, that's okay, because then you can clip that income for a bit longer. If we do see some cuts, that's okay too. Then you can get some total return in your fixed income investing overall.
You talked there about where you're seeing opportunities already. That's really what I was going to next ask you, really. Where are Nuveen's investment professionals sort of finding those opportunities in terms of that public fixed income space?
Yeah, I mean, I think where we're stressing at this point is still diversification. So we are very keen on making sure that you are staying diversified across all of fixed income. Again, being mindful of the crosswinds that we're seeing. We're also really talking and stressing active and dynamic management. We do think that we have to make sure you're allocating across a lot of different asset classes, but taking advantage of dislocations that are happening overall. We are stressing again that the yield environment is attractive, so we really focus on making sure we're taking advantage of that. We're comfortable, playing in the credit space and actually going down a little bit further down in the credit quality. We particularly like some of what we call the plus sectors, so below investment grade, but across the different opportunities, so like senior loans and CLOs, areas that we particularly like. There's some areas in the municipal space, particularly on the taxable side, that we're finding opportunities as well. So all in all, I would say we're stressing, kind of making sure you're diversified, you're taking that active overlay, leveraging, in our case, a very deep and seasoned investment team, and going after some opportunities in the broader fixed income space.
That's where you're seeing some opportunities. Issuance for green social and sustainability bonds is also kind of remaining robust, and certain innovative structures around that as well. So blue bonds, orange bonds starting to garner more attention. Is that something that you're seeing? And if so, what's your view on the future of the impact of those bonds in public fixed income?
Yeah, no, I would say that broader space continues to evolve and has been for some time. We think that's a trend that's probably going to accelerate more than anything. We do find that fixed income is well suited for really kind of taking advantage of some of the broader trends around greening of infrastructure, energy transition, what have you. And I think the markets are going to increasingly rely on fixed income to leverage that trend in general. As you mentioned, blue bond, orange bond, there are all kinds of versions of it at this point. We at Nuveen have been particularly focused on the impact side of that broader investment opportunity. We find that direct and measurable is very, very key, making sure we understand what the use of proceeds are, and making sure that if an issuer comes to us and wants to borrow money, that we can track that, so to say. And we're finding that investors are really gravitating towards that part of the fixed income opportunity set. a leader in that space and been investing in that broader impact space for a decade plus at this point. So, to answer your question, yes, I expect that to continue, and if anything, probably accelerate. And we feel like we're very well positioned to take advantage of that trend.
And that's despite the other factors that are now playing in. Some people have said, there are going to be brakes being put on some of those sectors because of the geopolitical situation, because of big elections happening. But you're quite positive by the sound of it that can continue.
Yeah, I do think so. I think, yes, there's going to be some ebbing and flowing, but I think, again, as I mentioned, it's an evolving space, and typically, we're finding that things will change and adapt, but capital markets ultimately are quite deficient. And if there's a demand and an opportunity to kind of put that type of investments to work, we do think that that's going to play through. I think, quite frankly, it's been a bit of a shift from thinking about equity and private equity in that space to, again, more of a fixed income solution. And we think that should, basically play through beyond geopolitical uncertainties as well.
A bit more stability, if you like. And alongside what we've talked about there in terms of the geopolitics, and what do you see as other key challenges perhaps in this space at the moment, and how do the best managers position themselves?
Right. I probably would say, keeping on the geopolitical kind of theme for one more second, I think that is particularly important this year. We're seeing, I believe the stat is over 50% of the world's population is going to be in an election in 2024. So it's a very, very key uncertainty. And we're always seeing this year some elections that have moved markets, been surprising and what have you. And I think you have to definitely, basically take that into your account as you're assessing opportunity sets and risks. Obviously, U.S. elections coming up in November this year, that's going to be very, very key. So we're trying to make sure that we're assessing both what the risks are and what the opportunities are. We have found that in many cases there's quite a lot of media focus that could drive volatility one way or another, and we try to take advantage of that. And if there are some market corrections that we think aren't justified, we'll want to make sure that we take advantage of that. Generally, though, we are looking to look through that and kind of take a little bit more of a medium to long-term perspective, making sure that we don't get caught up too much in some of the short-term volatility. If anything, look to take advantage of it. I would say there are probably other key risks that particularly we're concerned about, or at least we're keeping an eye on, is really in a kind of central bank policy era. I think that's really truly front and center. If we go back to that inflation kind of type environment we're in, there's no question that central banks are very keen on getting inflation under control, Federal Reserve being the key one from that perspective. If they make some mistake there, perhaps they keep rates too high for too long, and that could impact the economy in the US and therefore perhaps the global economy. That could have a very big impact on fixed income markets overall. So I would say our big focus right now is just making sure that the central banks and the Federal Reserve in particular get this right, and that they're threading that needle appropriately.
You mentioned the Federal Reserve and obviously US elections there. What would you say European investors should perhaps be focusing on at the moment? Obviously we've got a big election in the UK, but more broadly across Europe.
Yeah. No, I think the geopolitical side is very important right now, and given the EU elections, the France elections, what have you, I think that's something that we're going to have to continue to be very mindful about here in Europe in general. I think similarly, the central banks, ECB, Bank of England, and so on, making sure that they are also threading that needle. They're able to navigate what is really quite tricky economic crosswinds here in Europe. Obviously, the economy here in Europe is not quite as strong as we've been seeing in the US. So dipping into more of a recessionary type environment cannot be ruled out. So I think making sure that the geopolitical...
That perhaps has an effect in terms of the dollar against those currencies
for
too.
sure, exactly. I was going to say the FX side, as you're alluding to, is very, very key from that perspective, and trying to make sure that you navigate that aspect of it as well. The US dollar has been quite strong, and right now when the Fed keeping rates a bit higher for longer, whereas in the central banks in Europe are starting to cut, we could see the US dollar staying a bit on the stronger side for the next few months. As we see the US economy likely slowing down as we move into 2025, we would expect the US dollar to start weakening a little bit. But again, a lot of crosswinds there, and it really, really complicated to make a strong call on the FX side. But again, European investors have to kind of keep that in mind as well.
complicated, but great to hear you sounding so buoyant despite all of that, Anders. Thanks so much for sharing your insights with us
for
today.
sure. I would say,
Stay positive.
the ultimate theme here is that fixed income is back. Yields are really, really attractive. We're finding a lot of investor demand for fixed income globally, quite frankly, and I'm trying to make sure investors aren't missing out on this attractive opportunity that we're seeing.
Brilliant, great to hear. Thanks so much for sharing your insights. It's been great to talk to you.
Thank you so much for hosting me.